Well done on the return to market. It's gone, as many would say, swimmingly well and according to plan. Sell me the plan. Sell me the investment. You've just sold it to the institutional investors. What did they buy? What's the future trade?
Yeah, so good morning, Manus. I think a lot of the investors found the AIB story and the change that's been implemented in the business and the business model in the context of the strong Irish economy to be very attractive. So it's a business model that's quite simple, it's quite efficient at this point in time. We deliver strong levels of capital every year, and the Irish economy is in good shape and looking like it's got good growth prospects. So when you take those two together, combined with the desire by the Irish state to exit and recover its investment, that makes for a great formula for investors both now and with the opportunity for them to increase their position in the future.
Now, of course, the state still has 70% of you, Bernard, and so to a certain extent you have taskmasters. And many people in the market, we saw it here with RBS and with Lloyds, they're now gone from Lloyds. But to what extent, Bernard, is it going to be a very hands-off approach, in other words, over to you, or is it still going to be a very close relationship? In other words, interference is the word that I'm looking for.
Yeah, I mean, obviously it was one of the key issues that investors needed to get comfortable with and confident about. And I think what we've been able to demonstrate, even when the state was a 99.9% shareholder, that we run the business very commercially on our own. The board have a relationship framework established with the government, and the board is totally responsible for the day-to-day and strategic direction of the company. And that has come through very strongly in terms of some of the difficult decisions we've had to make to restructure the business. I think investors saw that and were comfortable that if we could do it when we're 99.9% state-owned, we can absolutely do it when the state owns about three-quarters of us.
When I look at the ambition of AIB, I remember AIB from 30 years ago when there was a powerhouse, a trading room here in London, when there was a North American, New York, significant operation, when it really had an international reach. And I suppose the question here is the scale of your ambition, Bernard. We know the domestic story in Ireland is one of recovery. But what is the ambition to re-engage on a global scale? Or am I looking at buy Ireland, Ireland product, Ireland story only, or am I looking at something much more expansive for AIB under your tenure?
Well, I think for now and for the next sort of number of years, the medium term, the next 2 to 3 years, it's really about continuing to do what we're doing at the moment. So the business model has been made much more efficient, and that's working really well. The Irish economy will deliver a lot of growth, and we're about 40% of that market, so that's very attractive. We have a presence, obviously, in the UK as well, and that's one we keep under active review, given the opportunities that it presents. And we have a small sort of footprint in the US, but it is modest. So for now, I'd say it's really about the efficiency of what we're doing, getting really good at that and making sure that we are the exemplar for everyone in terms of looking at how retail, commercial and corporate banking can operate in the new world. And beyond the 3-year horizon, well, then we'll come back and talk about that later, maybe.
We'll talk about that later. It's always good to have a five-year plan. That's what they told me to have as a career plan. So I'll come back to you as my mentor on that. Bernard, let's talk about non-performing loans. We've been talking about the Italian banks all week and the huge, I suppose, velocity in non-performing loan market for the Italian market. What are your plans in terms of bringing more non-performing loans and offloading those? Can you give us any quantums around what your ambitions would be 2017, 2018, so I can benchmark where the non-performing loan story goes with you? Yeah,
well, if you go back to 2012, 2013, we had 30 billion of non-performing loans in the bank. And at this stage, at the end of Q1 this year, we announced we'd got below 9 billion in terms of non-performing loans. So a massive reduction in that. And our overall commitment is to get that number down below 5% of our balance sheet over the 3-year period. So that's about 3 to 4 billion. So that's the sort of trajectory we're on. Another 5 to 6 billion to come out of the total number over the next 2 to 3 years. And that'll be a combination of continuing to work through restructurings, and that's going really well with customers. The strong economy obviously helps in terms of employment growth and asset growth, but we also carry out portfolio sales where necessary when we've reached the end of sort of the restructuring with customers, and some of those portfolios will be disposed. And we just disposed of one in April time, a buy-to-let portfolio. So we can do both, and we will continue to do both, and we have an absolute commitment to make sure we get down below the European norm within that 2 to 3 year time period.
Bernard, just before I let you go, I'm just curious to know, will you be buying more stock? Will you be buying stock in the company yourself? Will the board be buying stock? And if so, what kind of size?
Yeah, well, so we made a decision that as part of any allocation process, we wouldn't be actively involved to make sure that there would be no allegations of favouritism between retail or institutional. And actually right now we're in a closed period because we have our interim results coming up. So any statement we make in that will be after the closed period.